Long-term holders are selling Bitcoin. They have just offloaded over 337,000 Bitcoins in just the past 30 days. This is the hardest and strongest offload in the whole year. Together with that, BlackRock just sent to Coinbase Prime 9,000 of their Ethereum. What's going on behind the scenes? Are we about to start crashing towards $88,000? Or is this just a trap to scare you and we are about to start pumping to new all-time high? Let's analyze. Hello ladies and gentlemen of Paradise Club, this is Simon from Crypto Paradise. Welcome back, it's great to have you here. Let's analyze Bitcoin. In the previous video I have told you that we are at 20, which is extreme fear, and I have told you this is usually a bottom signal, and I have told you with the highest probability we will have some spike. We have got that spike, as you can see on the price section, this one right here, that pushed the fear and greed index that you can analyze and monitor with me 24/7 on our website for free, mycryptoparadise.com. It pushed the fear and greed index to 80, and you know the magical number 80, that's usually a top end signal if it's nicely confluences with the resistance. So are we at resistance? Are we at major resistance? What's going on behind the scenes? What are the probabilities? Is this pump sustainable and can it continue to go, or is this just another correction and we are about to continue in our crash to the downside? Let's take a look what's going on. So let's calculate the probabilities. Order book suit, we can see that on this price action to the upside we are seeing more sell limit orders are being executed. This is a clear distribution that's bearish. All right, if you take a look on the CVD plus on the Binance Spot exchange, we can see a steady decline. All right, so steady market selling. If you take a look right here, we can see above us there is a huge sell walls up to around $116,000. There is plenty of those worth millions and millions of dollars. If you take, so this is bearish of course. If you take a look at some buy walls, they are defending the previous low and we can see they are pretty heavy. This one, for example, is $107 million itself defending the previous low. So if you take a look right now on the increasement of short positions that happened since here, you understand from the previous video that this is not a retail entering short positions, because we can see the big chunks, the big red candles on the net short chart right here on this indicator. So that basically suggests that some big players been actually open in short positions. As you can see, before this huge crash, something similar happened, right? A huge short position right here was opened at this price right here just before the crash. You can see a steady increasement of these big chunks. It's not a retail, it's not like just this, right? That would be small short positions opening. It's big chunks. Some big players are entering into some big short positions, so this is bearish. If you take a look on the long positions, they are kind of steady. The CVD, as we have already said, it's declining, and if you take a look on the open interest, it's actually consolidating as well. So these big short positions are being positioned strategically into some buying liquidity. This is usually a sign of big players execution, which is basically usually smartly done so it doesn't raise awareness of the market participants. So this is bearish. If you take a look on the funding rates, however, on major exchanges, accumulated funding rates, not the classic one, the accumulated funding rates are turning positive. That is, the market is highly over leveraged on the long side, all right, which is increasing the bearish probabilities of a long squeeze, right? Binance is still negative on Bitcoin and Solana and neutral on Ethereum. So we might still have a little bit spike to the upside. What kind of spike? Well, if we take a look on the liquidation heat map right here, we can see over leveraged short positions, not the big ones, but over leveraged short positions are having their stop losses and liquidation levels. There's a big cluster at around $109,000. So definitely a spike towards this level is possible. If then spot will get caught in and start buying, we can go even higher. But the probabilities are that the spike will happen to liquidate the short positions, the over leveraged short positions, and then there will be a turnover to take out this liquidity pool below us. Let's take a look right now at the fear and greed index. As you can see, we are at 80 on 15 minutes time frame. This is usually a topping signal, but are we at resistance? Let's analyze. So first of all, let's take a look on Bitcoin CME futures gap gap. Do we have one from the weekend? We do, and we will close it only if we will hit $107,000. So let me put a zone right here. Beautiful zone. So as you can see, it's working as a support, but in 99% of cases, it always gets closed. And with this drop right here, it didn't get closed. So we will have a return within the next 3 months. You know that the rule of CME futures gaps is that within 3 months, all right, 99% of CME futures gaps get closed. So you might expect that the $107,000 will be revisited. All right, let's take a look right now on the weekly time frame. How did we close the weekly candle? Well, it was the biggest bearish scenario that I have updated you about on Saturday, and that means it closed below the orange moving average trend line. This is a huge bearish sign, and it's increasing the probabilities that we will hit the $88,000. As you know, the whole weekly time frame is bearish from the previous videos. Not only we are having a bearish divergence on the MACD, as you can see, the price action created a higher high, but the MACD histogram created a lower high. As you know from our MCP Free University, this is a classic strong bearish divergence, higher high on the price action. On the indicator, on the oscillator, you can see lower high. This is bearish divergence. The bulls, what does it mean? The bulls are getting weaker. They are losing momentum. You also see the bearish cross, which is increasing the bearish probabilities, and extended bearish divergence on RSI since 2024. You can see 1 and 2 higher highs, 1 and 2 lower highs on the RSI. So bearish divergence on RSI as well, which is confirming the bearishness. If, however, we will pick up on strength and we will be able to reclaim $121,000, we will revisit $135,000. But from the current price action perspective, it doesn't seem like it. The structure is bearish. You know, also from the arrow wave perspective, we are creating the expanded flat pattern where the C wave can take us towards $44,000. You know about this level, right? $44,000 in the C wave, and then by the end of 2026, early 2027, $240,000. It's all possible, and the probabilities right now suggest that until we can reclaim that $121,000, this is going to be the next roadmap. So take a look at this. Professional traders are always prepared for both scenarios, right? So right now the probabilities are suggesting that we will create a first wave of that motive mode wave towards $88,000, and we are already creating the subwaves. As you know, from the Elliott wave perspective, the motive mode wave, basically right now we are in that ABC flat pattern, right? The A wave and B waves are corrective mode waves, C and C, and the C wave is a motive mode wave. The motive mode wave subdivides itself into 5 smaller waves, and as you can see right now, it seems like we are starting the first wave. This one is the first wave of the motive mode wave, alright, which altogether have 5 moves to the downside, and the first wave is also a motive mode wave. That means it subdivides itself into 5 smaller waves. So where we stand right now, which kind of wave are we creating? Where you know that with the highest probability we have already created the first wave, and we have also concluded the secondary wave, and right now we are starting the third wave that will take us towards around $88,000. All right, so the third wave subdivides itself into 5 small waves, 1, 2, 3, 4, 5. With the highest probability we have already created the first wave, that was this crash, then a secondary wave, that was this that retested the 0.618 Fibonacci retracement level. Let me show you, let me zoom in a little bit. So basically until we can reclaim the previous high, alright, this one, and reclaim the 0.618 Fibonacci retracement level, the daily time frame is pretty bearish, alright? Here we are right now retesting, trying to retest the moving average trend line as well. You know that with ParadiseFamilyVIPs we have been shorting since this high. We have already, however, placed a stop loss to break even, so we will be out if we will hit again the high. But on the daily time frame, we will not be looking for long trading opportunities and trading tactics until we can reclaim that 0.618 Fibonacci retracement level. That would basically invalidate the Elliott wave pattern that we are looking at right now. So it will be kind of difficult in my experience for Bitcoin to break the moving average trend line, but it's possible. But take a look at this. The moving average trend line is just having a retest. So it really depends on how the daily candle will close. If the daily candle will close bearishly, favorably below this moving average trend line, it will actually put this line looking to the downside, and that will be a beginning of a bearish reclaim, because as you can see we have got a cross, and right now we are retesting retesting the moving average trend line. If we will start pointing to the downside together with reclaiming of this support zone, we will definitely be looking for increasement of our short portfolio exposure with Paradise Family VIPs. So right now, daily time frame, that's absolutely clear. If you take a look at the subwaves, we can see that here we have got the first wave of the third wave. All right. So the third wave is also a motive mode wave. Let me show you right here. That means it subdivides itself into 5 smaller waves. So with the highest probability, this was the first wave, then a secondary wave, ABC zigzag. That was a deep correction, as it should be, retested the 618 Fibonacci retracement level. Well, and afterwards we have started a first wave of the third wave, this one, right? Which is also a motive mode wave. That means subdivides itself into 5 smaller waves, 1, 2, 3, 4, 5. If, however, right now we will start going and crossing above the secondary wave, that will invalidate it. All right, and basically we will be looking for a long position upon reclaiming this resistance, because it will invalidate the whole pattern. But let's take a look first of all right now at the MACD histogram. We can see a higher high, lower high so far on the price action, which is a beginning of a bearish divergence, not confirmed yet. I want to see a bearish cross right here. Once we get it, and we are also back below this resistance, we will be looking for increasement of short positions, and it will be a sign that the Bitcoin will need to start dropping towards $88,000. If we will, however, be able to reclaim the 0.618 Fibonacci retracement level, we will start looking for some long trading strategies, but not until then. And also we will be very careful with long positions even on that reclaim, because all of these resistances on the 4-hour time frame. All right, this is 1-hour time frame. We are right now retesting the 786 Fibonacci retracement level. If we will hold below it, it will form the fourth wave of our motive mode wave, 1, 2, 3, 4, 5. All right, so very careful right now. We are watching how the 1-hour candle will close, how the 4-hour candle will be closing, and the daily, very important today, how all of these candles will be closing for our next trading decisions. So Paradisers, keep trading safe, take it easy and smooth, and I will again see you on Thursday. Cheers.